Have you missed it? Like, do you guys think, I should have got in on Bitcoin?
I don't spend long
5 years
thinking
ago.
about it.
Bitcoin.
Bitcoin is something that certainly a lot of people think, is going to rise as an alternative currency.
The Australian Bitcoin Podcast, presented by HardBlock.
It's not a currency, it's not money. I don't understand it.
G'day, folks. Welcome to the Australian Bitcoin Podcast, where we bring you the best of the Bitcoin signal from an Australian Antipodean perspective. Once again, I am joined by my co-host, Mike. G'day, mate. Joining us from the bush.
Yeah, our bush.
Very nice.
Lake Proserpine, middle of nowhere. It's pretty good.
Middle of nowhere. Okay. Is there any fishing at Lake Proserpine? What can you do at Lake Proserpine?
Yeah, it's actually supposedly the place where you can get the biggest, some kind of. I'm not a fisher, but it's one of the normal fish that people fish, and supposedly it's the place you can get the biggest of one of them. There's plenty of people out fishing.
Not a fisher person. That's the correct term.
Not a fisherman. No.
Yeah. And joining us today, maybe to talk about fishing, I don't know, but we're going to at least unpack and unwrap the macro shenanigans of the last quarter or so. The Sage Simeon himself, Mr. Andrew Paige of Strawman Investments. G'day, mate.
G'day. How are we going, boys?
Pretty good.
Thank you so much for coming back on and helping us to make sense of the clown world. It just keeps going higher and higher and higher. I don't know where the top is. Higher lows. So, dear listeners, thanks for joining us for episode 116 of the Australian Bitcoin Podcast. We're going to title this one, No More Juice Left to Squeeze. We're recording this on the 9th of July, 2026. Current Bitcoin price is 89,835 Australian dollar dues, or 62,344 US cuck bucks. The soggy sideways stumble endures even after a 7-day streak of all green days. We'll unpack price action since the last time we met, but we're going to talk a little bit about news. We're going to talk mostly about macro. I feel like there is a lot of problems out in the world, obviously, today. They're increasing tenfold almost every minute, or at least 7 by 7,000 per second if you look at the M3 money supply. But we have a solution, thank goodness, which is, all will be revealed if you haven't already figured that out. So, gentlemen, what are we going to talk about? Price? Let's get to price.
Let's do price.
Bitcoin rebounded. It sort of gave everyone a little bit of hope late last week when it climbed up to around 64,000 or 92,000 Australian. It was just green every single time you were checking the price in the morning. It was just green again. It wasn't red, and that was very refreshing. It wasn't extraordinarily green. It certainly wasn't verdant, but green is green. And then all of a sudden, what was it? Trump was asked, "Is the war with Iran over?" And he was like, "Yeah, these people are scum. I don't like them." So then we dipped again. So tell me, what's your experience with the price over the last couple of days, guys?
Well, we were sort of on the way, and the MOU in Iran was in place. Up until a few days ago, or I think today it's sort of really off the table now. If you delve into the news about the Iran war, but before that, it was looking good, and Bitcoin was starting to come back a bit, and we were seeing green. And then, in the last 4 days, it's come down again, unfortunately. And the only thing I can really see is just investors getting spooked off of Iran war reigniting stuff happening, and the call of the AI bubble, that call. You want some, don't you? You want some NVIDIA stock or something, don't you?
Yeah, because you can all afford the NVIDIA stock or the SpaceX stock, right? I mean, did you buy any SpaceX, Andrew? Is that Apple? Can I ask that? I don't know.
You can ask, and the answer is no. But it's look, gosh, I think it's a fascinating company. I wouldn't bet against it. I definitely wouldn't short it. But I'm a crusty old value investor at heart, and paying 90 times revenue is hard for me. And I think, like you guys, I've got a certain benchmark. So I look at anything through that lens of, is the risk return better than where it's currently at? And if the answer is no, then it's no. And that actually means that a lot of really good stuff gets put into the no basket. And it's not that there's anything wrong with it. It's just like, well, it's not as good as what I got. So
That's fair enough.
until that calculus changes. And by the way, that there is you know me, I like to play in the small cap space. There are definitely opportunities out there that I think would give an outperformance to Bitcoin. And when that's the case, there'll be an allocation there, right? But in the old days, I used to benchmark it against the market, so call it 10% a year, and now it's higher than that. So, and that's a long way of answering the question. So I don't want to upset the Elon fanboys. I think SpaceX is a great company. It's a bit rich for my blood, but markets are markets. There may come a time when it's the same company at a much cheaper price, and maybe that view will change.
Well,
It's the only view you can have.
I'll tell you what puts me off SpaceX, and I mean, truth be told, I'm still only investing in Bitcoin. But if I did have a portfolio, quote unquote portfolio, and wanted to add SpaceX to it, I was looking at it, and turns out, I don't know if this is like people kind of blaze straight past this, but something like 70% of SpaceX's business is actually AI. Like, it's because SpaceX owns XAI, which is obviously Grok and what they're doing over at Twitter. And if you look at their financials, it's some absurd proportion is AI. It's like 70%. And then only that little sliver that's left, that 30%, that's actually the space exploration stuff and Starlink and all the things that are quite impressive to me and attractive to me as a potential investor. I'm not interested in buying into a 70% AI bubble company, but I do want the space stuff. But you get both. So yeah. I don't know. Doesn't sit right with me.
It depends how you measure it as well, right? Like, so that I assume that's like revenue or something like that.
I can't remember. I need to dig it out. It's either, I don't think it's revenue either. I think it's capital profit. Expenditure. I think it's expenditure.
Okay. Well, yeah. This gets into an interesting sort of rabbit hole, because in theory, what you're buying when you buy a stake in a company is exposure to its future cash flows. And CapEx tends to precede cash flows. So it's really a question of not so much how much is the CapEx, but how much is that CapEx going to return and how soon? And as it does start to flow in, is it going to flow in from the AI stuff, from the rocket stuff? That's what makes this so interesting and also diabolically hard.
Yeah, and without it, and DJ, you'll have to cut us off soon, so we're not an AI SpaceX podcast, not a Bitcoin podcast. But the AI side of things, I think we've seen in the last couple of weeks some real cracks in the edifice, because I'm obviously a big hat AI bubble boy. The pop is coming, and we've seen some cracks. Hopefully you guys have seen the video of Alex Karp from Palantir having his little rant about Anthropic and ChatGPT. That's a great video. Go on, just look it up on Twitter or something. It's worth watching. He's crazy. He's an insane guy, and he's just there complaining about Anthropic and ChatGPT. But then on the other hand, what the Chinese are doing with their open source models is starting to get really, really interesting. And I think that something is going to happen there once the penny drops and these models start becoming more accessible to the global audience. If they can get over their China phobia, that's where it's going to be real interesting to see what happens to the big players, XAI, OpenAI, and Anthropic. Bubble's coming.
This is really hard. I'm conscious of what you just said about not deferring too much from the topic du jour, but
keep going.
There's a lot to say with all of that. I think absolutely agree, Mike. I think there's a lot of bubbleliciousness over in sort of AI territory, but I do think it is pretty nuanced. There's plenty of past technological sort of switching points tend to sort of have this over expansion, this and this overvaluation But from that, you tend to see a lot of value created. It's just often created in ways that aren't where you would expect. So I think with a lot of these models, it's hard to sort of see where the moat is. In previous iterations, there was a lot of sort of switching costs and incumbency effects. And with the model, it's sort of like, I'll use the Anthropics until, OpenAI comes up with a better one, until XAI comes in. It's very easy to switch. It's very difficult to see how sort of near-term cash flows are going to rationalize those prices. But I think there's a lot of things that are sort of adjacent to all of that that could be more broadly defined as sort of AI or part of the AI trade where that isn't true. And again, that's reminiscent of past sort of technological breakthroughs, whether it's sort of electricity or steam or the internet or anything like that. So I think, and the other thing I would just add to it, and again, I'm really just agreeing with you, but I guess the nuance with it all is that, and this is a hard lesson, and it's a hard lesson learned the hard way, is that markets can remain irrational far longer than you can remain solvent, I think is the old saying. And for those that sort of have that more rational, value-oriented sort of line on things, it can be a very painful experience watching the world go from crazy to batshit crazy. And that might take years. And so it's sort of like, it's hard to be right when everything is screaming at you that you're wrong. And we always talk about capitulation on the downside with assets, but capitulation happens on the upside too, right? It's like, stop it. I was wrong. That's it. Everyone's making bank. I'm getting involved in this as well. So hopefully that doesn't happen with any of us here, but I would caution, I guess temper that view in the sense of you're probably right. I think you are right with a lot of those things, but it could be a while before that view is proven to be right, and the way in which it's proven to be right could be almost certainly will be interesting, I suspect.
Sure. I mean, the only reason I sort of bring it up is, like, even though we're kind of top of the show talking about Bitcoin is, and I'm kind of curious for your take on this. The reason I keep talking about AI and the markets and this bubble is, do you see it as sucking attention away from Bitcoin? Because that's kind of the sense I get from it is, kind of one of the reasons, other than the geopolitical strife in Iran and all these other nonsense things happening around the world, investors are just smitten with AI. And so rather than looking at good old Bitcoin and gold and some of these harder assets, they are just chasing this dream. And that's why I think that until we see some real pain in that area, whether it be a bubble popping or something else, we might still be kind of eating shit in Bitcoin for a while. Do you agree with that, or do you think that's silly?
I do. Although I guess the wrinkle I would sort of add to it, I think it's one of many sort of factors. And this is always true. It's sort of, I'm fond of the idea that narratives follow price action. And I think sort of things happen, and then it's very natural for humans to look around and look for an explanation. And a lot of those explanations can be very accurate. And it's very plausible. It's a very plausible narrative, and I think it's probably right. But I don't know if that in and of itself is what it is. But I mean, look, the same phenomenon translates into stocks. I mean, the Aussie share market's doing okay, broadly speaking. But then you look beneath the surface, and so many former tech darlings in particular, sort of the good old SaaSpocalypse has been brutal. I mean, there's been like WiseTech, Zero, like Pro Medicus, Objective Corp. You just go through the list of like what was always regarded as sort of like the shining stars of the ASX on tech. And they make Bitcoin's fall look tame. Some of these are down 75%. You can go overseas as well and look at Atlassian, look at other things. And, it's just, so it just feels like, the capital is being sucked out of all of that and being put somewhere. And so I think you're probably right. And money will flow back at some point. What that catalyst is going to be, I'm not sure, but I think it's part of the narrative. It's a very long way of me saying, I agree.
These are the sorts of things that we talk about when we're in the depths of a bear market. Anything else other than Bitcoin. And I guess I get that concept of AI taking up a lot of the attention in the space. It's almost like it was the new, like Bitcoin from a tech perspective, like all those bros that were in it for the tech, they got super excited about it around sort of 14, 15, 16, 17, which was kind of like the peak of all of that, because it was this new hot thing. And that narrative has shifted now, and it's moved away from Bitcoin. And now Bitcoin is just money, which is what it always was. It's just that it was this new shiny thing, and it had all these tech aspects about it, and it still does. Nothing's really changed. And it's almost like it's now trying to battle through that sexiness that's now gone, and AI is sort of taking up that mantle. It's like all the tech bros that were in Bitcoin beforehand for the tech are now into AI for the tech, and Bitcoin's just money now. It's kind of boring. And it's reflected in the price. I wanted to ask a little bit about strategy and how that plays into it, because it is obviously adjacent to Bitcoin. Like, it's been getting hammered lately in terms of narrative and price action and things like this. Do you have a position or a perspective on strategy at all?
I don't. Although I got to tell you, I'm pretty tempted. Right? It's hard. It's hard to be bullish on Bitcoin and bearish on strategy, unless you suspect there's some malfeasance or something there, which I don't think there is. But I'm also very cognizant of the fact that it is sort of, you're taking a very volatile asset and you're making it even more volatile, and you're adding in risks that just don't exist with the native asset. So I've kind of had my hand stayed at this point in time. I do think some of the negativity around it all is interesting. I think anyone who's been viewing the success of strategy as pivotal to the success of Bitcoin has got their hopes misplaced. Because if this thing was ever reliant on the success of one corporation, it was never going to make it to begin with, you know. So I wish them the best. I actually think that they're probably doing. I'm just not too deep in the weeds, but from what I can gather, I think they're probably doing a sensible job. They've got heaps of collateralization that's there. It doesn't seem that, you know, at face value, doesn't seem like it's that much of a worry. But people have sort of put them all in the same bucket: Bitcoin and strategy and Michael Saylor, and it's sort of all there. And if there's one thing that's not great about this, then the whole thing is a bust. And I think I can understand that perspective, but I think it's too shallow. I think it would be, put it this way. Let's say worst case scenario, it's a massive corporate fraud. It goes to zero. They're forced to, you know, sell all their Bitcoin as fast as possible. That is going to be very bad for the Bitcoin price, and it's going to be very bad for the sentiment around it. And it's just going to do a lot of damage to the brand of Bitcoin. But if it can't survive that, it was never going to survive in the first place. So again, I don't think it's going to happen, and I think it would survive that. But yeah, I really do try and keep the two things separate.
So it is just for anyone who missed it. So the reason we're talking about strategy is because they made another sale of Bitcoin this week. So I don't know if it was last episode or 2 episodes ago, we talked about strategy selling 32 Bitcoin, and that caused a bit of a sharp drop in the market. So just on Monday, they've sold 3,588 Bitcoin. And that did send the market. Well, did it though?
Yeah, pretty. I mean, like
early in the week,
it certainly didn't tank as dramatically as
the 32,
as that 32 Bitcoin. Yeah. Like, gee whiz.
Yeah, but I mean, I'm still neutral on strategy. I'm not for or against it. You know, good on him for doing what he does and dealing with the stress of it all. But yeah, as Andrew said, we don't want to pin all of our hopes and dreams on the failure or a success of a single business. That's foolish. We're dealing with a global money. Should be relevant what happens to Saylor and strategy. And if anything, if strategy does back off a little bit, it'll finally stop the people that say, "Oh, but isn't there a problem with one person having so much of the network all concentrated in one place?" Even though it doesn't ultimately matter, it will at least cause one more piece of FUD to shut up finally.
That is my view. Actually, on all of the negative things, maybe we'll talk about Bit 110 or anything like that. But I think any kind of time that there's a challenge for Bitcoin and it overcomes it and endures and overcomes is actually a great thing. It's a very bullish thing longer term. Is we're all very familiar with the Lindy effect, and it's sort of like not only the passage of time, but the passage of time through very harsh waters is what you want to see. It's going to become every day that it doesn't die makes the value proposition stronger. And every day it doesn't die, or every time it rises to the challenge of something like this, the value proposition rises. And I'm not instantly, and there's usually a bit of a valley you've got to go through, but and just one quick thing I wanted to say, Mike, again, I'm not super close on this kind of stuff, but in regards to the sale, I think they bought much more than they sold, right, over the course of the month or week. I think that's just generally true. They're sort of my understanding of it is that he's trying to get the credit ratings agencies on board and sort of prove to the market that it's sort of, there's no point in having a whole bunch of collateral there if you can't liquidate it, right? And I think that has been the fear, and I think he's talked about that. And he says, so okay, we're going to inoculate the market. We're going to sell some to show that it can be done. But what matters is not the sale, but what is the net difference. I suppose we could talk about the Aussie dollar. I mean, I've had a good year. If I've obviously spent money throughout the year, but if I've brought in more than I've spent, I mean, that's a good thing. So maybe I'm being too simplistic on all of that. But I think a lot of people on Twitter are just getting too ideological, and there's almost a religious seal with it. But but he said never sell your Bitcoin and this and that, and he's done it. And I'm like, it feels from the outside that he actually telegraphed this pretty well. So did Fong, and on a net basis they're still acquiring. It's like, it's not. I get it. I get it's a bit of a shock to the system that for the guy who said never sell your Bitcoin, but this is the same guy that also said it's a waste of time, it's going to zero. Don't forget, he's got tweets that say that as well. And we all change our minds. God, there's podcasts of me. You go back far enough, and I'll be saying Bitcoin is the crappiest, stupidest thing in the world.
That was when you guys were working at McDonald's.
Cancel this man. Cancel him.
You're looking for a hassle-free way to buy Bitcoin in Australia? HardBlock makes it easy. As Australia's longest-running Bitcoin-only exchange, their mission is to help Australians simply and easily buy Bitcoin and take it into self-custody. There are no deposit or trading fees, just a clear 2.4% spread. That covers operating costs, so you always know exactly what you're paying. Withdrawals are just $1.18 or as low as 400 sats with AutoSend. There are no hidden charges, no surprises, just a fast, reliable, and easy way to stack sats with total transparency.
Got that old tweet.
And I feel, for me, I like to really, even when I disagree with decisions, I very much like to publicly applaud those that change their mind when the facts change. And I think anything other than that is just a mental intransigence that just shows a rigidity of thinking. And it's just like, if that's the kind of, that's not what I want to aspire to be. I would like to think that when new facts are presented and the reason and the logic holds up, that I would change my mind to that.
Shout out Scott Phillips. He's getting there, man. He's getting there.
Right.
Just to answer your question as well. So this year, Strategy have acquired, even though they sold, 3,400 Bitcoin on Monday. Year to date, they've acquired 175,000 Bitcoin. So
are you not
currently sitting on 847,363 Bitcoin.
Yeah.
Right. World's largest. Before we pivot too far away, I just wanted to bring up something that did catch my eye. It's a little off topic. Going back to the AI thing, and you were talking about the SaaS apocalypse that's currently going on the ASX. There was a story that came out, I think it was earlier in the week, about a small real estate firm called Greenleaf Management. Basically built themselves their own custom CRM in a week using Replit and Claude. And they no longer have a use for Salesforce. And this is the sort of thing, right? That AI, exactly. This is the sort of thing that AI can be put to good use, because Salesforce is just this overpriced CRM. I mean, if you can afford to advertise at the Formula One all around the world and get Billy Idol and Gwen Stefani and all of those others, I think even Gene Simmons, or it's the other guy, the lead singer, Paul Stanley or whatever his name is. Like, you get all these rock stars advertising your CRM. Like, you're making a bit too much money here, guys. And so we need the SaaS apocalypse to take hold. I'm kind of hoping that Atlassian is one of the first on the chopping block, because their products suck.
Death to Salesforce, death to Atlassian, SaaS apocalypse.
And that Mike guy, he has opinions that just should not ever share about things. Like, honestly, it's like the Elon. Like, honestly, half your cap raise came from the government, dude. So shut up.
I would just always celebrate the efficiency of markets. I mean, whether it's AI or whatever's disrupting these companies, I think it's a good thing, right? This is what enables us to have more and better and cheaper services, you know? So
and that's also the argument against my, like, even though I'd say doom and gloom, AI bubble, if it does live up to the task and it does mean that I can no longer have any SaaS products, I no longer need any other services because I can just talk to my bot and tell it to do whatever I want. Okay, well, maybe that is the most valuable thing in the world. And the bubble is justified.
Actually, both things can be true, Mike. I mean, when it depends what you mean by bubble, but if you mean by a price bubble, it's like that can absolutely pop. But the technology, I mean, the classic example here is of the rollout of fiber when the internet was first a thing. You know, it's just like so much capex, so much overspend, so many companies went bankrupt. We use the cable, right? We use the fiber, and I suspect the world is moving too fast to make any predictions too confidently. But I suspect that even if, and this is where I very strongly agree with you, a lot of the valuations, a lot of this capex won't be justified, but these data centers will still be used, right? In fact,
they got to store all our surveillance data somewhere.
That's well, there's no shortage of data to collect and store. Yeah. So it'll be interesting. Yeah.
Okay. I reckon we should pivot a little bit to some macro stuff, and I just want to couch all of this and contextualize all of this. There is a campaign that we're running on HardBlock at the moment. It's around tax time. Tax time is incredibly nauseating. We had Mr. Adam Ahmed on a couple of episodes back. It was incredibly insightful. One of the things that I took away coming from that was that anytime you want to try and get ahead and make some money in this country, they'll just change the rules, and you will no longer have that option available. And that is a thing that he's seen over like 30 years in his career. So we come up with this idea of the war on savings and basically why it's harder to get ahead for Australians. And so the notion is that you can do all of these different things. You can become a part-time investor. You can employ someone like, you can enlist someone like Andrew to do it on your behalf. That has its own costs. You can do it yourself. That has its own costs. And tax time kind of brings all that into sharp focus. And you actually see just how well off you are or aren't, and whether or not you're actually achieving your savings goal. So we're going to unpack a whole bunch of macro, which is basically supporting this thesis that it is a war on savings. It is more and more difficult every single year to get ahead, to save for that thing, whatever that thing is. It could be a house deposit. It could be, a new car. It could be a flat screen TV, whatever it is. And when you get your tax return, we're encouraging people to, instead of buying handbags and flat screen TVs and all of those other things, is to put them to productive use. And of course, we would advocate buying Bitcoin on that news. So we have a link, War on Savings. It's in the show notes. If you click on that link, obviously, if you're already existing HardBlock customer, you already understand the thesis, but maybe this is something that you could share with friends and family, and they will get $10 worth of free Bitcoin when they sign up and verify their account, so that they can just get started and start to fight back against this war on savings. Because, I mean, it's pretty dark out there. There's some of the news that I pulled up over the last couple of days. We've got this headline: Australians suffering from sharp decline in living standards. According to the OECD, Australians have experienced one of the sharpest declines in living standards in the developed world since the pandemic. According to a new report from the OECD that warns that real wages are set to fall even further this year as high inflation erodes workers' income. And there was a chart by Tarek Brooker, my best mate on Twitter, who still doesn't understand Bitcoin. And he came in response to Jimmy Chalmers. The minimum wage has gone up $12,000 a year under Labor. Around 3 million workers just got another pay rise. So it's at that 4.75%. So if you're a small business owner, you've all of a sudden got to find 4.75% on top of all the super and all the other obligations you got to pay. Anyway, Tarek retweeted this tweet by Mr. Jimmy Chalmers, and they've just gone through the roof, through the floor. You've got the baseline at 0 in 2022, and it's now net negative 0.04%. It's like in worse conditions than COVID. So, like, it's as clear as day that there is a war on savings. And there was another chart that I see. It's going to be in the newsletter this week. The consumer sentiment has gone through the floor as well. It's at worse levels than the pandemic as well. And it's all to do with, by and large, policy. So this is like deliberate decisions by, the powers that be that tell you in one sense that they're trying to make things better. And in the other sense, they've got the money printer going burr at $7,000 per second. Let's unpack that for a second.
There's a lot there.
We've known for a while about the decline in Australian living standards. My question is, when do people ever get to some point where they start, wigging out, acting out? That's what I'm waiting for, but I don't know.
Well, that's the point. I mean, hopefully, like, without being violent, we can do the peaceful revolution, a la that article by Nick Carter, fight back, buy Bitcoin, like suck away as much of that fiat energy as you can from this old system and put it into something that actually respects you, even though it doesn't care about you. Like, the network doesn't care who you are or what you do, but it honors your ability to preserve your wealth creation and your value creation forward into the future. You're not getting debased. That's how I'd advocate for people to fight back.
Yeah. The problem with that solution, and I agree with the solution, obviously, is that it's only, you've got to recognize the problem before you see that as a solution. And I would go out on a limb here and say you guys have had the same experience as me and of most people listening to this pod, is that it's a very hard pitch to make. It's the most obvious context in which it comes up for an Australian is usually around conversations around housing affordability and those kinds of things. And you know what the talking points are: negative gearing and capital gains tax and immigration. And yeah, they're all massively important. But no one talks about, fractional reserve debt creation and monetary expansion. Like, it's just not a thing. And it's sort of like, that's what I've always found a very difficult thing to get people to understand is that it's not even in the same room as these other topics. And you sort of introduce it, and it's like, what are you talking about here? It's clearly it's a bit like, trying to explain water to a fish. It's sort of, it's just a very hard sell. So if you guys have had any success with that, I would love to know how you've cracked that egg, because usually when these kinds of topics come up and I kind of say, the problem is the money kind of thing, it feels a bit crazy, honestly. And that was my reaction to it when I first came across it. And let's be real, it stinks like crazy. It's too conspiratorial. It's too foundational, right? But I would even go as far to say, look, I don't even think it's deliberate. I honestly don't. I always never attribute to malice what can adequately be described by ineptitude. Is that Hanlon's razor or one of those things? And I think it's just people trying to do what they think is the right thing with a very poor framework, certainly some very, very bad incentives. And
when you say malice, are you talking about attributing malice or rather ignorance from people who refuse to see the issues with our monetary system, or are you talking about malice from the orchestrators
the powers that be? Yeah,
the powers that be.
I honestly don't think that they're sitting around a big, table in hoods, just talking about how
circle jerking. No,
they're not. They're not doing it. They're just not doing that.
That's where you guys lose me. I'm all in on there's a round table somewhere full of nefarious banking families that want to increase the distance between us and them to the plebs and the elites.
It's possible. But
That's
I
it. They
talked about
hate us.
Henlon's razor, right? Like I go to another one, Occam's razor, which everyone's familiar of, and it's just a more simple explanation because one requires a very, very deep, highly orchestrated conspiracy, and the other one is just, hey, people are short-sighted, greedy, and myopic, and it's sort of like, yeah, that's a
Let's
pretty
take
good
advantage of
explanation.
them.
Yeah, no, and it's not even the people taking advantage of the people doing it. I reckon you could take these people, almost not all of them. I'm sure there's some real evil buggers out there, but for the most part, I reckon you could wire them up to a lie detector test, and they would absolutely advocate and argue that they are doing what is right. They believe it, and they believe it because that they've just got a certain view on the world and how the world works. And I guess a lot of people have looked at it would disagree with that worldview, but in that worldview, I think they're being consistent, and I think it's a less exciting story, but it's we'll never know, right? Unless one of us gets invited into the room. But here's the other thing though. It's a great sort of like sit around the fire and drink some beers and talk about. But at the end of the day, whether it's that or that, it's kind of like it's the same outcome. Deliberate or just bad incentives. It still drives towards a very bad outcome. And just back to the original point, it's just a very, very, very hard thing for people to see. And so you sort of say, hey, get out of the system. You should buy Bitcoin. Like what? The hyper volatile crypto bros shit that's like crashed 1,000 times and is using all this water or whatever. It's just like, it's so, I feel as though this is the thing that we as Bitcoiners probably need to really make peace with, is that Bitcoin will win because of all of the things we know it'll win. It's got the right attributes, it's got the right properties, it's got the right game theory, it's got all that kind of stuff that'll do it. I just think it's going to be a super slow grind. I really don't see a world in which people we'll hit that part of the S curve when things really start when adoption really starts to take off. But I think, and that's probably a while away. Until then, this is just going to be speculative mania, brutal bear market crashes, but with each wave, new people coming on board, and building that base up, and just that slow grind of adoption. And it's a really unappealing viewpoint, because it just, like, once you see the future, you want it now. But I would put it this way. I put it this way as an investor. Go with that as your base case, and that way, if you're wrong, you're not going to care that you're wrong. Like, it's okay to sort of like be surprised to the upside. But if your base case is, no, I'm just waiting on this catalyst, and then we're off to the next bull market and I'm going to make bank, I feel as though you're setting yourself up for failure and disappointment. Yes, sorry, I meandered all over the place there.
I agree with all that, and I think that the outlook for Bitcoin is still good. Like, I have zero doubts in my mind that the outlook for Bitcoin, and I'm talking about globally, Bitcoin is good. My concern is genuinely just on the level of Australia's economy. Like, if you look at the numbers that are coming out now, like, it is so bad. Like, we've been talking about how bad it is for a while now, but I was reading some Deloitte report that said that growth for next year, possibly even this year, is going to be 1.2%. Like, that's insane. And considering that half of that is government public spending, if not more than half now, I think it's like 60% or some insane amount in the last 5 years or so has all been government led, taxpayer funded jobs or government related jobs. It's going to get real bad here. And even if Bitcoin does take off, like, if you're the one Bitcoiner in a crowd of 100, and they're going to be looking at you and going, "Oh, he's got what we don't have," or even if you do pack yourself into a bubble because you've been very conscious about what's happening financially, and Australia starts decaying around you because of how badly our economy's been mismanaged, and how just socialism in general has just made us very sloth-like and happy to sit on the gibs and not actually go out there and start businesses and create wealth.
That's the thing.
It's going to be scary, I think.
That's the thing, man. It's not the slow decay and like, it's the reluctance to go out and actually try and build anything or do anything anyway, because one person's wage is another person's income or whatever. And like, it all just circles around. And if you just don't have access to the capital to go out and try new things, or you're going to get taxed 47% at the end of the day when you have an exit. Like, what's the point, man? And then, so yeah, all right, let's just turn it into a communist utopia. None of us will work. And I don't know, let me know, like, when my pina colada's ready, for fuck's sake. Like, seriously, it's just insane. I mean, the RBA knows it themselves. We've got a headline here in the list that poor old Michelle Bullock is facing a pay headache as RBA staff reject a 9.5% wage rise. 9.5? Who the fuck's getting 9.5? Like, fuck, these people know the decision. They know what's going on.
It kind of flew under the radar because if you think about it, the RBA, they're the, you know, with my conspiratorial hat on, they're part of that nefarious group that wants to ruin our lives and keep us as slaves forever. And they're the ones that are saying, oh no, 9.6 or 9.5% is not enough. We need more. Meanwhile, everyone else is getting even way less than that in terms of raises. So they're you know, the writing is on the wall of how bad the state actually is, and they're probably demanding something like 15% because that's true inflation, not these fake stats that get thrown at us. Oh yeah, headline inflation's 4.5%. Yeah, don't worry about it. Don't look at the supermarket prices. Don't worry about that. And meanwhile, the RBA is asking for more than 10% pay rise. Well, something's not adding up here.
So as a value investor, Andrew, how are you even like ascertaining where to deploy some of this capital? Because a lot of these businesses, particularly on the ASX, surely half of them are at least going, don't know about this. I might just shoot off and do something else, you know, work for the library or something.
Yeah. I mean, well, I don't know. I step back and I think there's a couple of things you've got to acknowledge. Things are definitely deteriorating here and around the world, and the corruption of the money is arguably a big part of the base of that. But the human condition is always in pretty shit. Like, of any point to live in, I would probably, if I could go, like, if we live now or at any point in the past, I'd probably choose now, right?
What about the 90s, man? Come on.
Yeah, I didn't have an AI agent and a smartphone in the 90s. So
that's probably a good thing, though.
I mean, look,
the shared experience is more important to me than an AI agent. I think.
I guess what I'm not trying to argue the point. I'm just a difficult bugger at times, and so I guess what it is that you when you look at other parts of the world, it's sort of like, Australia's pretty good, right? I would rather live here than in most other places, and that doesn't mean that I disagree with the view. And I also think that
I think that's the point, though. Just to push back a little bit on that, like, because Dale says the same thing. We had Dale Warburton on talking about My Bitcoin Will a couple of weeks ago, and he said the same thing because he's South African and he can compare and contrast really easily. And it's you know, it's totally true. We're in a little bit of a bubble here as Australians growing up in Australia. And no word of a lie. Like, it's pretty good, but that's the responsibility is to meet that and maintain it and improve upon it, not degrade it.
We can never justify the degradation by pointing to the fact that, well, it's not as bad as everyone else. I only drink 2 bottles of whiskey a day, but you guys drink 8. So therefore my alcoholism isn't that bad. And it's a really good argument. And I actually don't, I agree. I mean, I just, when you frame it all up and once you take that black pill and you start seeing some of these problems, and it is very bleak and it is very hard to sort of see hope, and it feels like things are going to get a lot worse before they get better. You start, I mean, I'm speaking from experience, and that and things that I catch myself that I know that I do. I look for the confirming evidence. So as you say, I saw the Deloitte report that did this. I saw the RF, and you pick out. I mentioned to you 3 white doves. You're going to see 3 white doves at some point in the next week.
Collapse in the wave,
and it's so what I do, and it's purely not to be a difficult bugger, but just to sort of put that balance out there, is that I think all of that can be true. And you can, this is a long run up to answering your question, Dan, and you can still find a lot of really great investment opportunities. So is it a black and white thing? So no. Is it harder to start a business? Yes, much harder. Are they making it more and more difficult? Yes, they are. Are they removing the incentive? Yes, they are. But it's sort of like there is still going to be that hard-nosed entrepreneur. It's just like, I just have to do this thing. I've just got to do it. I'm going to do it regardless of what broader context is. And then with some of them that are just create insane amounts of value that'll be out there. And it's true when actually, even if you take a more equity focused view and you get rid of a lot of the macro and a lot of fourth turning, whatever kind of stuff, you will always see in the frothiest of bull markets, you'll just see absolute things that are crashing and burning. And absolute depths of bear markets, there are stocks that are just flying. They're the best opportunities ever. So I'm trying to be more pragmatic with it rather than acknowledging the point that you guys make, which I again, let me emphasize, I agree with pretty much all of it. But as an investor, I would put to you, what else are you going to do? Right? Like, it's like I'm still going to, I'm not putting my energy into Australian dollars, right? I am definitely not doing that. And the opportunity set of good quality investable assets is much smaller and getting smaller, but they're still there. And I would sort of say what it means. There's this hackneyed phrase in markets. People say it's a stock picker's market, which I've always hated because I would say it's always a stock picker's market. Nevertheless, it's a stock picker's market in the sense that you really, if you can be fussy, if you can be disciplined, you will find opportunities. There are people who mentioned the South Africans. I mean, that's a country that's got some issues, right? But there are some businesses there that thrive, and there are entrepreneurs there that thrive. So just. You've got to lean into that kind of stuff, and because opportunity is always there, even if it is harder to find. And if it's not, there's always that one thing that's unchanging and will be around for a long time. So there's that kind of changes the game. I think for me, as I said indicated at the beginning, there is a new benchmark. There is a new holding pattern that must be exceeded for any capital there to be reallocated. And that's a beautiful thing, right? And I think that here's the other thing, right? Sorry, I'm a bit all over the place here, but I think it was Safadine who said it first, is that the biggest bear case for Bitcoin is responsible fiscal and monetary management. It really is. That's why you've seen the emerging markets lean into this stuff from a more utilitarian perspective than anyone else. It's like, and why in the West it's just a thing to invest in. It's because there is a much more pressing need. If we lived in a world where the powers that be were running, for all intents and purposes, a hard money system and balanced budgets, some of the technical merits of Bitcoin are probably not enough in and of its own to push people towards it. So it's if I can put a silver lining on this dark cloud, it would be that this is all bullish for Bitcoin longer term, because it doesn't solve. If you're an upper middle class person on a good income with assets, Bitcoin's not really solving any problem for you in the West. In Australia, it's just not. Maybe I'm interested. Maybe I think it'll do well. I've got a bull case for it. Rah. But frankly, if it wasn't there, I'm doing just fine. Thank you very much. Right? And I always get a loan. I can use that credit to buy hard assets, and I can just continue expanding the wealth gap to my advantage. Right? So it's fine. But when as dark as these things are, it forces more people to look for a solution, and Bitcoin will be there for when and if they need it. And so that's my positive spin on the degradation of Australia.
Do you still recommend people read The Intelligent Investor?
No. It was very, even before all of this, it was somewhat dated in the way Ben Graham did things. And it was also very, very dense and could easily be very summarized.
Right. So
I think the core lessons of that book are very relevant and will always
still applicable.
Yeah,
okay.
100%. Yeah.
That's kind of what my broader point was.
People need to read. I think a lot of people in my space love to flex by saying, "Oh, have you read this?" Because it feels like it's like a badge of honor. But you don't need to read it.
It's just like, how difficult is it as a value investor to actually value invest? in a
Very
monetary
hard.
system that is
Very
like,
hard.
we'll just print it.
That's what I know. I know a bunch of investors who I would regard as just really good investors, and they've just underperformed for ages, really post GFC onwards. And the problem for these guys is that they are right in the framework that they operate in, which is they just don't see a lot of this monetary interference. So
So
they
they're kind of like,
you know,
like
they just look at
equity
things that are
gold bugs.
Yeah, I mean, they look at there's a very broad recognition of like I don't know. I always pick on Pro Medicus because it just seems so it's not contentious to sort of say it's a very high quality company. I think objectively it kind of is, but the sort of the curmudgeonly value investor looks at that and goes, great business, but it's too expensive. And they're kind of right in a way, but then when there's continual expansion of money and you know this all ultimately finds its way into assets, we are seeing elevations in they call it multiple expansion. Average market multiples are much higher than they ever used to be. I think that's probably, as much as I cringe whenever I say this, it's probably a bit of a new normal, and that is what has undone a lot of these value investors, looking at things going, you know, that's just objectively expensive, being right, but then watching that objectively expensive thing 5x from there and then crash to a level that's still 3x what they, you know. And so yes, in a fiat world, value investing as advocated back in the day, I think is harder and harder to do. If you're waiting to buy a good quality company at a PE of 13 or something, like it's going to be very, very hard to sort of do that. So
I'm just mindful of the time, so I want to get to a couple of other news stories, and we'll bring it back to Bitcoin as well. But this is intentionally about a Q2 macro wrap, and I think undoubtedly the most the thing that stole the headlines, the thing that we should probably address. Can we just get your take on the 2026-27 federal budget that was delivered in May and caused a heck of a lot of consternation throughout the nation?
Yeah, I mean, look, I didn't like it. I thought they made a lot of mistakes. Some things that were all right. It's rather than go into too much detail there, I would say get used to it. Was it Naval or someone recently said nationalism or socialism here from here on out? That's it. They're your two paths, right? Until there is like. So I don't find it surprising.
I vote nationalism.
You know, I mean, but neither is
sucking noises, man.
Neither is great, you know. So it's kind of maybe if you put a gun to my head and choose you, I'd be with you, Mike.
That's what happens, dude.
You know?
That it will happen. That's the choice. The gun at the head.
It's coming,
metaphorically or
it's
otherwise.
Coming. It's coming either way. Pick a side.
But it's sort of. I feel as though I've been saying for a long time. The advice, the generals always fight the last war, and there's a lot of people in my space will sort of advocate for sort of Gen Y and below. It's like, oh, you should really maximize your super contributions, for example, because it's so tax advantaged and rah rah rah. And they're kind of all right, but it all kind of sits on an assumption that will never be screwed with. And my strong assumption is that is a massive pot of money that politicians of either stripe, of any stripe, are going to find extraordinarily difficult to resist touching.
Isn't it like $12 million now or something?
Trillion, yeah, it's huge.
$12 trillion.
Yeah, it's massive. It's one of, and we're a nation of 28 million people, and it's one of the biggest sort of sovereign wealth piles that's sort of out there. So it's going to be It's called. I don't know if you guys know Russell Napier. He's not a Bitcoiner, I don't think, but he's a great economic historian, a Scottish guy. I'd really encourage you to sort of check him out. But he's been talking a while, banging the drum on the idea of what's called financial repression, which usually what happens in these kinds of situations. I think it'll be very slow, like the changes that we've seen in the most recent budget, i.e. there'll be increased taxes on wealth. There might be mandates within super that you have to put 10% of your money towards government bonds. There might be mandates within that, you know, some of the advantages will be wound back. Some things will become more punitive. And you can make that statement. I think you can make it, again, I know how it sounds to the uninitiated because it does sound a little bit crazy, but I think you can make something like a statement like that and be reasonably confident of it for a couple of reasons. One is that's the historical record. That's what happens when governments get over their skis and they find themselves with a massive debt problem and a massive deficit problem. That's what happens. Now, we can argue what the flavor of it is and exactly what kind of ism it manifests, and exactly the play-by-play and on how the powers that be come out and do it. But there will be a financial repression of sorts. You will find that the best play, ironically, in this kind of space is to just, it sounds counterintuitive to anyone who's like sees themselves as financially responsible, but take on as much debt as you can reasonably burden. Because why wouldn't you?
That is the game, isn't it?
It's a speculative
That is the
attack
game.
on the dollar. I want to take stuff that because inflation is coming one way or the other, and that's what all this. Sorry, I skipped a step there. That's what all this financial repression leads to is some flavor and some form of money printing, whatever acronym we want to cook up for the next round of it. And when that happens, assets will attract a premium and debt will lose value in real terms. And so it's really annoying. And the poor are going to be the ones who get screwed over, as they always do, And we should absolutely jump up and down and scream and talk and point to it for the atrocity, which is the exact word for it, by the way, that it is. But at the same time, if you want to protect yourself, buy good quality hard assets, whatever that may be in your conception, and take on a bit of debt. Not something that can be easily called, not something that's got a very high LVR where any kind of volatility is going to throw you out. But like, why wouldn't you take on some debt? I mean, I got a much bigger mortgage on this house than I need it to be. But I like the fact that every year it gets 4% lower in real terms. And the thing that I would have to sell to pay off that is, I would argue, is going up at a much higher compound rate on average over a much longer period of time. So, not that I can give financial advice, and I'm not giving financial advice, but I'm just saying, if there is some kind of financial repression, if we are in for a higher for longer inflationary kind of environment, don't do what your grandparents would argue that you should do, which is minimize your debt and be free. Because it's exactly the right thing to do in a sane world, by the way. But we don't live in that world, and the world that we live in would suggest don't put any extra money into super that you have to. I know that's very sacrilegious to most financial types. Don't pay off more than your house than you have to. Don't be silly with this idea, but keep a little bit of debt, because each year it's getting worth less and less. And don't take on debt and then go buy a car or something stupid like that and depreciating it. Go and buy something else that's going to appreciate. It's a pretty good play. And at the same time that you're doing all of that, tell everyone that's near and dear to you to do the same, because it's going to get worse before it gets better, and it kind of has to, because the incentives are there, because the math's going to math, and there's just no way out of it unless someone gets up there and says, "Hey, we're going to balance the budget. We're going to take away all your services." Good luck to any politician that wants to run on that platform.
Good grief! It is. I mean, the party's over. It's a war on savings, and God, that sounds so counterintuitive, but it's absolutely bang on. Before we pivot quickly, talking of financial atrocities, Australia's committed to implementing. We've got the Project Acacia. I'm going to get Mike to unpack all of this, but this is kind of like our CBDC. And Mr. Trump, he recently wrote an executive order to stop work on the Project Agora, which is, I guess, the US version, I think, of the CBDC. Can you tell us what's going on here? Because one of our fellow exchanges, highly regarded in the nice, good sense of the term, Bull Bitcoin, is suing the French finance ministry because of this. But you know a little bit more about this, Mike.
Oh, well, that's actually two separate stories. We've got the Agora CBDC stuff, and then we've got the Bull Bitcoin stuff. But they are kind of still linked, because the OECD is kind of part of, they're in bed with the Bank of International Settlements that are doing the CBDC thing. So maybe we talk about the Bull Bitcoin thing first. Basically, Bull Bitcoin, they're an exchange over there in Europe. They got a French CEO who's pretty based. He currently lives in Costa Rica, and he is suing the French finance ministry over their new law, which is basically doing mass crypto surveillance, mass surveillance of anyone doing crypto or Bitcoin transactions in Europe. And so he's suing them. And it's part of the OECD. They have a crypto asset reporting framework, CAF. And they're updating the common reporting standard of that to basically say, okay, every country that's part of the OECD, you have to track everyone's crypto transactions and upload them to this database, ostensibly for for tracking and surveillance, obviously. And so there's an article on The Rage about this, therage.co. They do very interesting Bitcoin stories, so I highly recommend reading that article about this. But the reason I really want to talk about it now is because what I didn't realize until after I read this story was that Australia's signed on to this. We're doing this. This is launching January 1st next year. Australia is going to be taking everyone's transaction information, not just crypto transaction information, but everything, including your crypto and Bitcoin transaction history. And they're going to be feeding it into this OECD CAF reporting database. And it's one of these things that no one talks about. And even myself, who does dig into these things and tries to keep in touch with, the way our government wants to surveil us and ruin our lives, this is the first I've heard about this. This is happening in 6 months' time. It's going into a global database. No one's talking about it. This is in Australia.
Awesome. Sorry, was that on the ballot sheet when I don't remember seeing that policy.
No, it was
for your protection.
Oh, yes, of course. And the children. Save the children.
Yeah.
It's a form of financial repression, to the earlier point. Get used to it. More of that's coming.
Well, I think it's about you're dead right, I think it's about closing down the loopholes and escape routes and that sort of thing, so that when they do ramp up their repression, you've got less options available to you. So
I feel like this is like I'm inching closer to either the final scene in 1984 where Winston just kind of whatever that line is, where he just decides to love Big Brother, or the Doctor Strangelove. I mean, these are pretty esoteric references, but they're not really if you're cultured like I am. Doctor Strangelove's How I Learned to Stop Worrying and Love the Bomb with Peter Sellers, Stanley Kubrick back in the day. It's like 1964 or something. Fantastic movie. There's a beautiful line in there where they're in the war room and he says, "Gentlemen, you can't fight in here. This is a war room."
This is the war room, yeah.
It's beautiful. I find myself inching ever closer to either Winston or just learning to stop worrying and just love the bomb. As you say, Andrew, just take on all the debt, buy hard assets, and just ride this baby down.
Yeah, sometimes in an insane world, an insane move is the only sane one, right? So, it's pretty scary. I don't know if you guys saw this, but they even noticed logged under ComSec the other day. A few people point this out to me: is you couldn't. They took away the buy button for the Bitcoin ETFs.
Oh wow! There you go.
For the ETFs.
Huh.
Right. And because there was apparently a scam out there where someone was encouraging people to buy these Bitcoin ETFs, do in-kind redemptions, and then send the Bitcoin, which if you've ever tried to do that, it's not a straightforward process and feels like an extraordinarily roundabout way to try and grift some Bitcoin out of someone. And it probably only happened once and, anecdotally, but it was enough to remove the buy button, right? Like it's pretty wild.
Man, these blah, blah. What can you say that we haven't already said? To be honest, the party's over.
It's just about get the information out there and hopefully radicalize a bunch of people. See how we go.
Yeah, fight back by Bitcoin.
I'm ready.
You get $10 worth of free Bitcoin when you do that. If you use the code War on Savings at HardBlock when you sign up.
Nice.
Just to finish off that story, and then I'll talk real quickly about the Fed side of things. So specifically with this CAF stuff, it is about tax. Like if you actually dig into the article and sort of understand some of the nuance there, it is about trying to chase people's tax payments globally, even if you do, because they must be noticing all the stuff about the, the flag theory where people are setting up jurisdictions all over the place so they can jump to different countries as laws start to get really messy around making sure they get their pound of flesh from you. I think this is an effort to still chase those people no matter where they end up around the world. So yeah, it's another one of these tax gross things. And then the other story, also on the rage.co, also worth reading. When Trump came into the office for his second term, he signed an executive order ordering the Fed to stop CBDC research, central bank digital currency research and project developments and rollouts and that sort of thing. But there's been some rumors that the Fed has continued to be working on it anyway, because the Fed is still part of the Bank of International Settlements group, one of these big nefarious organizations who I think is, one of the members at the round table of people that wants to ruin our lives and destroy everything. One of those guys. So the Fed, the American Fed, is still on the project Agora, which is the project to basically do a global CBDC that is the financial rails between all the different reserve banks for each country around the world, all the central banks around the world. And so it's interesting. It's, even though Trump said no, they're doing it anyway. And my bet is he won't kick up a fuss if he ever does find out. Because, I don't
What's
think
the definition of Agora? Something to do with Greece?
Yeah, it's it's a meeting place. It's a marketplace. Yeah, I was doing some research and I found some interesting words are important. Words are important.
They certainly are. Etymology is crucial.
So Agora, Project Agora, and the sort of sister project of that in Australia is Project Acacia, which we've talked about many times before. So that's Project Agora is the Bank of International Settlements global project to do a CBDC to do payments between reserve banks around the world. That's Project Agora. Now, Project Acacia, that's the Reserve Bank of Australia's mini version. It's the Australian focused version of Project Agora. They call it Project Acacia. And sort of when I read this article about the Fed supposedly still working on Project Agora, I started doing a bit more research. And you look at definitions, like what does Agora mean? What does Acacia mean? And with all these guys, all these big, this is why I can't let it lie that these guys are part of they're a big in-group, it's a big party, we're not in it. It's conspiratorial because everything comes back to these biblical double meanings and these sort of ancient meanings in the words. So Agora means marketplace in ancient Greece, but it also is equal to 100 agoro or agorot, which is equal to 1 shekel in Israel, which is obviously the currency back in biblical times. And then Acacia, again, has an interesting meaning. Acacia, which a lot of their projects are about tokenization of your mortgages and tokenization of your debt and your assets and all this sort of thing on your Commonwealth Bank ledger. And Acacia, in Australia, it means a species of trees. There's a bunch of trees and shrubs that are acacias in Australia. But if you look at the definition of an acacia, it is also a roll or bag filled with dust borne by Byzantine emperors as a memento of mortality, represented on medals. And, I find this super interesting that both of these projects, the global spanning Project Agora and then the Australia spanning Project Acacia, done by the Reserve Bank, which is obviously best friends with the Bank of International Settlements. Remember, the Bank of International Settlements is the bank of the Reserve Banks. So they are the head of the snake, the head of the beast, and then all the central banks, the Fed and the RBA stem from that. And it's interesting that they're using similar words that have that have very interesting meanings back in this, ancient time where all the scriptures and all this sort of stuff was flying around. And that's why I'm just like, I don't think it's coincidence. I don't think it's just people acting on their emotions and their incentives. I think there is nefarious shit happening. And these groups, they are the ones doing it. It all comes back to money.
Yeah. I mean, they're pretty dumb though. It's hard, right? Because you've got to be super smart to orchestrate it, and yet you're that dumb that you're actually going to put clues in the name. Like
that's what they do.
But that's what they have to do. That's what they have to do.
You have to do that.
They have to show what they're doing, and it's part of our consent. So we are
so you
shown
can atone.
the slaves at the bottom they show us what they're doing. They tell us through their symbols and their double meanings and their definitions and all this sort of thing. They put it in our face so that they're absolved from guilt because they told us what they're up to. All
It's
the information's there.
Absolution.
Maybe.
Yeah. Okay. So this is the Australian Bitcoin tinfoil hat and macro podcast, and we are joined by Mr.
Love it.
Andrew Paige.
I love it.
It's atrocious, and it's a war on savings. And I'll just harpen back to it. This is like, honestly, if you have low information friends that spend a lot of time on Facebook and Instagram, point them over to our Instagram page or our Facebook page. They'll see a link there. It's hardblock.com.au/join/war on savings. They'll get $10 worth of free Bitcoin, and they can suck out some of the fiat energy and put it into a network that actually respects you and reveres you and will not denigrate or degrade you over time. And yeah, maybe that sounds ideological, but we're in a bear market and I'm kind of sick of this shit. Just before we close out, I just wanted to mention that we are going to be talking about BIP 110. Mike and I are going to become BIP 110 experts within the next couple of weeks. We're going to have Michael Dunworth and JP joining us to politely, civilized discussion about BIP 110 and unpack that. I don't know if you have any pre-thoughts on that, Andrew, or anything.
Yeah, I want to get Andrew's opinion. We can't let him leave without sharing his opinion.
Oh man, it's complicated. I feel as though no matter what I say, I'm going to piss off half the audience.
Oh yeah,
so.
yes. So maybe don't say anything.
Well, look, I think there is how do I say this? I've often, whenever you're a guest on a podcast or any kind of platform you're given, you feel as though someone asks you a question, you must have an answer, you must have an opinion. And the honest answer is I don't really have a strong opinion, except this. My understanding is I am spiritually aligned with the BIP 110ers. I don't like spam on the blockchain. I get it. But if the solution's not going to work, then I feel as though it's doomed to fail. But I don't know enough about it other than that. I guess I would say, as I understand it, it's not existential, right? And I would never personally, I'm not going to be doing anything with my node until I have a strong view on it. I don't want to be making an ill-informed view, so I'm going to be listening to the podcast that you guys are going to do with JP and Dunny, because I'm actually open to interpretation. But I will say this again. I said it at the start. Bitcoin will survive it. My God, if it couldn't survive that, then what are we doing here? Like it'll survive it, and it'll be stronger because of it. And I think there's a lot of people out there who look at this, and I put myself kind of in this camp where it feels scary, it feels confusing, it feels as though it sort of undermines the entire value proposition and investment thesis for it. And I think if I've at least gotten to a stage where I don't think that's true anymore. I think there's a lot of noise and sound and fury and a lot of heated arguments. And usually when that's the case, the truth is somewhere in between. And we'll come out the other side of it. And you know what, guys, we'll be talking in 5 years' time about how we're in a bear market. Bitcoin's crashed to 300,000, whatever number it is. And the next technical talking point will be that the more things change, the more things stay the same. I think.
Yep.
So that's not that. I've got to be careful. It doesn't mean you should just be hand wave it away. I'll be fine. Like that is reckless.
Yeah, you definitely want to be aware of it because end of the day, it can have a tangible effect on you and your holdings because if a chain split happens. So it is something that you want to keep aware of. But in terms of the opinion side of things, you don't necessarily need to wade into that because you're just going to get some shit thrown at you.
Or wait till you've got enough evidence to have an opinion or to have a strong opinion. I've always been very fond of the idea of strong opinions weakly held. It's like, I think this. I mean, I believe Bitcoin is going to survive and prosper, and eventually, at some point in the future, will be the world's reserve currency. I genuinely believe that, right? Nevertheless, if someone was to come out tomorrow and say, oh, by the way, and point out something that was just like undermined that entire thesis, I would like to think I could change my mind on it. And I think we've all got to have that view. I mean, you know, it's a nice analogy here is potentially with the quantum sort of FUD. No one's talking about that anymore. That hasn't gone away. And I'm not suggesting that people should worry about it either, but I'm just saying, isn't that just the nature of this space that we're in? This little echo chamber is like, oh, this is the thing. Oh my God, we have to worry about that. Oh, now this is happening. Oh God, you know. Or on the other side is like, oh, this, you know, Trump's going to do this, and then that's going to happen. Oh, then we're all off to the moon, and you know, it's just like one of the
Gotta
great.
have something to talk about, man.
You've got to
It's the
have
life of
something
the
to
content
talk
creator.
about. I really do get it, but I would say this is someone who's been an investor their whole life. One of the great appeals that I have with Bitcoin is that unlike a share, I have to really have a very firm view on the business model, the value proposition, the competency of management, the broader macroeconomic landscape, you know, the pace of change in technology. Like there is a million and one things that you need to get across to have a firm view on a business. And then you got to figure out what's a fair price to sort of pay for it. Then you got to have the patience to wait for that price to be delivered to you. And then you have to have, you know, the discipline to sort of stay with it as the thesis plays out. It's hard. Like, you know, investing is super, super hard. Now, not that investing in Bitcoin is easy, but I guess once the great thing about it is that once you've grokked it, once the penny has dropped, once you've understood what it is and what it means, you don't have to worry about it. I'm never going to wake up tomorrow and there's not going to be a headline unless there is some critical technical gremlin that's lurking in there that after nearly 18 years, no one's discovered. You know, and even then, I think it's a social phenomenon at its base and it will be patched and go on. But if, you know, you don't have to worry about all of this stuff. I think, imagine if I came back from the future in my DeLorean and I said, guys, I'm going to give you one question that you can ask me. I'm from 2035. And you'd probably say, well, what's the price of Bitcoin, right? Now, let's say I said to you, it's worth $2 million, just for the sake of argument. That's the only thing you knew. I mean, what would you do with that information? I know what I would do. I would buy a lot of it and I would sit on it, right? And even with perfect clarity and foresight and vision as to what the future holds, what I didn't tell you when I came back is I don't know how you're going to get there, right? And if there's one thing that we should know better than anyone else is that path is going to be scary. It's going to be full of volatility. It's going to be a bit like war, long periods of boredom, you know, interspace with periods of sheer terror and joy. That's what it's going to be, right? And the waiting is going to kill you. And the doubt is going to kill you. The volatility is going to kill you. But you know the destination. So what? Whereas I can't make that claim, or I can't make that claim as easily with Amazon or Nvidia or Google. I mean, gosh, tech's moving. So maybe those things don't exist in the future. Maybe the world's biggest company in the year 2035 hasn't even been founded yet. You know, but
No,
this
because
is
it's all FOSS. It's awesome. It's going to be great.
And it's just, and maybe that's the truth. But once you've got a digital commodity in cyberspace, like that's a one-time invention. It'll never be disrupted. It'll never be displaced. You don't have to worry about next quarter's earnings. You don't have to worry about, you don't have to worry about anything. And it's just sort of like, that is a wonderful, wonderful thing as an investor. Lower your time. I'm saying stuff that Bitcoin has been saying for forever. Lower your time preference. You know what the destination is. Buy on a regular basis. If the market wants to be stupid and give you a 50% discount, maybe do something about that, you know, and then get on with your life, because, you know, at some point in the future, this is what's going to happen. You know, those who have been able to endure this pain, and it's painful, right? Like the pain of boredom is as much as bad as the pain of things going down. But at some point, I suspect it'll turn, and it'll turn aggressively. And then every one of your friends and family is going to say you're lucky, right? Or that was easy, or, you know, or it's unfair to you. And you'll be able to say, well, no, it was not luck. And it's very fair because, you know, it's sort of like you see the outcome now. You see this latest pump, or you see this and then headlines or whatever. What you don't see is me staring at the ceiling at 3 a.m. months in a row, wondering whether I've just like ruined my entire family and, you know, generations to come, you know, fortune by betting on magic internet payments or not. You don't see that kind of sort of thing. But I guess what I'm saying is that if you want all of that, this is the reality of it. This is how it looks. Did you really think you're going to rock up one day, have Grok Bitcoin, buy it, and it was going to 10x tomorrow? Like, there's no reality in which that happens, right? So this is a get rich slow kind of thing, right? Unless you're just lucky with the timing, and that's okay.
Yeah, don't get poor slowly. We are going to close the show in with a green candle. We are currently sitting at 90,100 Aussie dollary dues, which is good. It's a little slightly higher than when we started. And investing is difficult. It is complicated. It can be complex. It can be complicated. Those two things are not mutually exclusive. So I would suggest, if I give you a quick shout out, Andrew, to jump onto strawman.com, which is Australia's premier online investment club, and you do a bunch of research and insights with respect to the ASX stocks. And Andrew knows his onions, as we've just unpacked over the last hour or thereabouts. And he's a Bitcoiner. So,
well, I should clarify, it's not me, right? So it's a community. It's the whole raison d'etre with this thing was not to have a platform where people come and do what I think is right. What do I know, right? So, but it is me and a bunch of other smart investors in a room nutting it out, and then you can kind of sort of see who you like and see who's got the track record, who's worth listening to. So
the game is take on as much debt as possible and become a part-time investor. So you might as well arm yourself with some asymmetric knowledge, and it sounds like you've got it. Strawman.com. Andrew, Mike, Australian Bitcoin Podcast, episode 116. There's not a lot of juice left to squeeze. Thank you for joining us this afternoon and this evening. This afternoon. What's the time? I have no idea. We'll see you all next time for a debate, a polite debate, a civilized debate about BIP 110. Cheers, boys.
Thanks, guys.
Thank you.